Bernard, also Detroit Police Commissioner Linda Bernard. It's a pleasure to share this time period with you, and I look forward to covering a number of events and so forth that I think you'll find very, very interesting. Again, you're watching me and watching this broadcast on Wjzz Cool TV, the coolest station in the world. And you can watch us, listen to us on Twitch, Twitter, um, Facebook, YouTube, any and all social media platforms. So it's a real delight for me to share this time with you. Before I introduce my guest today, I want to cover some things of national and local interest. First of all, as a Detroit Police Commissioner, many of you have seen the recent news reports about my colleague who was arrested for engaging allegedly in a sex act in his car early one morning. I just want you to say that, as you know, he has resigned from the Board of Police Commissioners. There is no action that will be taken by us, nor would any be appropriate. It was a personal, private matter, and I assume that he's dealing with it with his family and obviously with his church and also with the courts, because it's a legal matter. So I wish him well, and all I can do is tell you and that sometimes when people are not thinking clearly, or their actions, of course, reflect that. Poor judgment is something that we all are capable of, depending on the situation. Secondly, regarding local matters, I'm sure that most of you probably know that 9:10 a.m., the station that a number of people listen to in the city of Detroit, that was a 24-hour information station, has now closed. Unfortunately, a number of the key voices in the city of Detroit who have been engaged with the station for many years, Ms. Charlene Mitchell, an outstanding marketing person and television personality, certainly Mr. Bancolet himself, who is a distinguished journalist and Detroit Free Press contributor, and many others had shows. Former Sheriff Bill Ficano and of course Willie Burton, who's also on the police commission. They all had shows on that network, and it's my understanding that they walked in and they were told they were no longer needed and the station was closed. This is very disturbing to me, and I want to tell you why. The broadcast license that 910 had for both its television and radio broadcasts, and incidentally, it's the #1 station for broadcasting black church proceedings throughout the country. It's in every country in the world, and they've been doing this for some time. But many of the major ministers, black ministers in America, were all broadcast through 910. I believe that the word, I don't know if the Word Network, which is not the word, whatever the name, Word Network, I'm sorry. I think it may still be on, but clearly 9:10 a.m. the radio station has gone. But let me tell you why that's disturbing to me. Many years ago, Kevin Adele and his dad contacted Reverend Jesse Jackson and said they wanted to do a broadcast medium here in the city of Detroit. They weren't getting anywhere with the FCC, the Federal Communications Commission, in terms of getting a license. So they contacted Reverend Jackson, and they included in the persons who were involved with the station, who were part owners of the station, Mr. O'Neill Swanson, a legendary funeral director throughout America. He did Rosa Parks' funeral, etc., as well as a Reverend Sheffield, whose daughter now, Mary Sheffield, is the president of the Detroit City Council. And there was one other African-American person, I don't remember who it was, but in any event, it was because Jesse got involved, and Jesse, of course, forced the minority participation in the station, that they got their FCC license. And since then, the station has grown considerably, and it's unclear to me exactly what's happened with the African American participation with the station. But in any event, this past week, everybody there got the boot with no notice, no anything. They're just gone, vamoose. That's a problem for me. First of all, it's disrespectful. It's disrespectful to the people who are involved, and it's disrespectful to my community in general. There is always a better way to handle things, and you do it. You handle labor relations, any kind of issue, with finesse, and you never rob people of their dignity. And you do that by, of course, by continuing to treat them properly and giving them notice, talking to them, letting people understand what's going on. Come on in, and my guest is here today. She's coming in as we're talking. Come on, have a seat.
Thank you.
How are you?
Fine, thank you.
Linda, why don't you introduce yourself very quickly, and then I'm going to come back to my commentary.
Okay, I'm Linda Taylor. I'm a certified public accountant.
Okay, thank you, Linda Taylor, CPA. And we're going to talk to her in just a couple of seconds. But I found the situation with 9:10 a.m. and them summarily firing everybody to be very disturbing. I understand that the station has been sold. That has nothing to do with how you treat people that you've been working with. So thumbs down to you, Kevin Adele. On the political front, the issues in Washington, of course, continue to make major headlines. Personally, I think it's disgraceful what's occurring, both in terms of all of the indictments of President. He'll always be president. That's like we address Obama. We don't address him as former President Obama. As the way that they're treating President Trump, which is outrageous, from the very beginning, from the committee, from the television coverage for the committee and everything. But most importantly, with respect to the congressional committee that was formulated, I just want you to know that anytime you have a committee that's 2, in this instance, Republicans and 5 Democrats, you already know what the outcome's going to be. And that's highly unusual within my experience in Washington. Usually committees are balanced, with maybe 1 additional member from the prevailing party, but never anything like that, where it's 3-1, if you will, in terms of representation. And they pick your representatives, so they pick the people like Cheney, etc., who would be the persons that would be most favorable and to their position. On that note, let me just say, from my perspective, there was no insurrection. I repeat, there was no insurrection. There was clearly a riot for about 3 hours, and people went crazy. And by 6:30 that evening, the Capitol was back in business as usual, and in fact they voted to approve the election results at 8:30 p.m. We've all experienced a number of disturbances and riots, and certainly fire stations burning up, the police stations being set on fire, people in the streets destroying property. That's the more equivalent to an insurrection, and that's what they that's incidentally, while I'm on that point, in 1967, when we had what the media calls, quote, the riots in Detroit for several days, and that kind of destruction. The media referred to it as a riot. African Americans referred to it as an insurrection. But unfortunately, the media never took it to be that, because it was just that, a bunch of people acted absolutely crazy and destroying some property for a very limited period of time. So it was never viewed as an insurrection, because there was no change of power and absolutely no possibility that there could be a change in power. So having said that, we're ready. I think I'm gonna go over now to my guest, Linda. Okay, Linda, tell us about your business and what you do. You've got to pull a little closer here to the microphone, and
they can see me.
Yes, and if you don't mind, just take your phone down, because it can't ring during the broadcast.
No, it's
Okay.
turned off.
Okay,
Anyway.
thank you. Okay, thank you.
Okay. My name again is Linda Taylor. I'm a certified public accountant, and been a CPA for over 35 years here in the in the Michigan area. So one of the things that a certified public accountant does, we do taxes. I think that's what people think.
Right.
That's the only thing we do. But most of all, we are certified because we do certified audits, attestation. So my firm has done a lot of work in terms of grants, money that has been received from different agencies that we do audits, and some of the agencies, for instance, would be Department of Education. So we may audit a school program, Title IV, to make sure that the funds coming from that federal funding are utilized properly. A lot of times, agencies, nonprofit agencies, have to have a CPA to do their certified audits, and what we do, we're not the internal auditor, we are the external. So they would have a bookkeeping or accountant inside. We would come and review the information to make sure that the submittal, because most of the time the federal funds want submittal from an independent CPA to attest that that agency has performed utilized the money according to the regs. So my firm has done audits with the Department of Education, HUD, which is Department of Housing. We've done Department of Labor. Labor is workforce, where again, people receiving funds for the youth and dislocated worker programs that the city or state may, when they delegate the funds, they generally want at the end of the funding source, they normally want a CPA to come in and do an audit attestation, because again, the funds that are coming to the city and the state are a flow through. So basically, a lot of people, oh, the city owns these funds. No, the city is accountable, so they cannot do their own audit and say, hey, you did not use these funds right. In the end, they can say that, but the CPA comes in and they attest to the fact that the agency which is a subcon grantor, did utilize the funds that were given to the grantor. So basically, the grantor could be the city, and then we also make sure there's no conflict of interest or same people getting the money or all kinds of procurement violations. So CPA does more attestation to federal compliance. That's why we have to have a license as a CPA. Again, a CPA is someone who has a degree in accounting, and they pass the State Board of Accountancy. They have to do 2 years under a certified public accounting firm, and the purpose of being certified again is to certify the financial statements of a nonprofit. We also do businesses. A lot of businesses, they're looking for loans with SBA, the bank, or so forth. Those agencies require an independent CPA to come in and review the financials. They may look at the internal financials, but those financials, they want someone independent to make sure that they're not just put together just to get a loan. So we do a lot of SBA loans, we do federal loans. Outside of that, the firm is a licensed apprenticeship program with the Department of Labor, and what we do, we bring in students or people that are majoring in accounting, and they get on our apprenticeship program, which is a 2.5-year program, and once they complete, they become a certified journey person, and they can be placed in a job. But we mentor them while they're in college, so that when they graduate, they can also become a CPA if that's what they want to be. So the firm does a lot of things, not just, they do we do monthly bookkeeping services, which we utilize QuickBooks. We do taxes, starting from single, individual, LLCs, corporate, trusts, private foundations, a little bit of everything. We do grants in terms of, we may not write the grant, but we'll work with the grant writer. So when the grant writer needs the budget and so forth, we'll prepare that for them.
It's my understanding that your business is located not only in Southfield but also in Las Vegas. Is that true?
Right.
You have a Las Vegas office as well?
Yeah, I basically, like I said, I've been a CPA over 35 years, and I had an office in Indiana because that's where I was born. I'm a Wolverine, Hoosier, excuse me.
Okay.
And so I had an office there. I have one here in Detroit, which is where I reside, and then Las Vegas, I also reside there too. So basically, most of the work that I do in Las Vegas is with nonprofits and one NFL person who's a Raiders. So we're global.
Okay.
So basically, I'm licensed in 3 states, but I have a consulting firm which does most of the work, which is Global CFO. So so I do operate in various states in terms of our consulting.
Well, that's wonderful. You're a very distinguished woman. You said earlier that that you were a Hoosier, so you were born in Indiana.
Yes, and I went to Indiana. I got my bachelor's and my MBA from Indiana University.
IU. They play Michigan and they play Michigan State. They're part of the Big Ten.
Right.
Yeah,
right.
I followed them closely because my nephew also graduated from IU.
Oh,
but,
did he?
Yeah, but let's talk a little bit about the tax situation in America. How did you feel about the government agreeing to hire 80,000 more IRS agents, and how will that impact our community?
Okay, well, I kind of figured they would because of when COVID hit, and also when Trump was in, there was a lot of tax law changes, and also COVID gave a lot of money out to small businesses, individuals, and so forth. A lot of and they gave it out so fast they didn't have the rules, because I would get phone calls and someone would say, well, I did this and now, and I even talked to the IRS. I said, you didn't have a rule for it, but now you're after the people. So basically,
which makes it illegal, wouldn't it? You can't.
Well, the IRS can do whatever they want to because their money. So basically, if I
tell people that all the time, there are 2 people you don't want in your life: IRS or FBI.
Oh my God.
They just make their own rules. You're right.
Yeah, they make. I mean, even if somebody gives you money, I give you money and there might be a stipulation, you received it.
Right. So you're obligated to report it.
Yeah. Even if I say, oh, Johnny, here's 10,000, give it to me when you want to. Mm-hmm. Well, and you're an attorney, mm-hmm. so if I say, okay, Johnny, I want my money back, and Johnny says, well, you said give it to you when I'm available. I said, well, those terms, it's my money, I want it.
Right.
I mean, just like if a landlord, and I've rent property, if a landlord rents a house and they give you month to month, you can stay here as long as you want to. Then I go to them and I say, okay, I'm going to sell the house, or I want you out of my house. But you said I could stay here as long. I own the house. I can put you out whenever. So when I tell people, I work with a lot of clients that get federal funds, you need to put your controls in place. Because if those funds are not used properly, you face penalties, interest, and possibly jail time, depending.
I see. So should ordinary citizens be concerned about the 80,000 new IRS agents?
Yes, they should. Well, particularly, they're going to go after the people who had Schedule C or businesses. A lot of people structured a business because COVID, they were trying to give that money out. So people came up with a tax ID number, and they said, I have a business. I lost money. So they may have gotten 10,000, and they're going to ask, how did you use this money? A lot of people took the 10,000. They didn't have businesses. They went and used it for maybe a car, or flying to Las Vegas and having a good time. Some people actually had LIFO done and all that. I mean, I've heard a lot of stories in the street.
Wow.
I personally, when people came, if someone came and said, hey, do I qualify? I tell them, absolutely not. You don't have a business. I just set up a business. I'm going to we don't deal with, Mm-hmm. So, yeah, they're going to come after the people to see, did you have documentation? And then there's another one that's out. It's called the ERIS, which is if you had employees, you didn't have to pay matching for employee taxes. You can get a credit now. people are applying for the credit and they didn't have employees. I mean, I had a client come to me the other day, and he's like, I thought I was supposed to get a refund of $15,000 because I had employees. I said, well, how many employees did you have? And he said, one. And I said, well, did you do a W-2 and so forth? No, I paid them. So that's not employee.
No.
Okay? Employee is a W-2 where you're filing your 941s and payroll register. So the IRS said, let me see these records. He didn't have them, so they reversed the 15 back with penalties and interest. Now, what will happen?
So he had gotten the $15,000.
Yes.
Now he has to pay it back, you say, with penalties and interest. So how much would that be if it was the $15,000 that he got?
I don't
In your
know.
opinion,
It
about?
depends on how long it would have been. A penalty could be anywhere from 10-15%. Then the interest on the money that they could earn, and then if they find out now in this case, if they find out that you made up something, you could get hit with a fraud penalty.
Wow.
That's not good.
And how much is a fraud penalty?
Oh, it could be 50%. You know.
So he got, you said 10,000.
Okay. Now this one, excuse me. He applied to get it. He's waiting for his refund. Then he said the IRS sent him a letter and said, "You're not getting this 15,000 because you didn't have." So if you want us to, you need to amend your return for this, or we'll charge you for a false return. Okay. So either amend it and say, okay, I didn't have. So the IRS is real sticky, and a lot of CPA firms specialize just in taxes, and they can make a lot of money. I don't specialize a lot because I did have a partner that was a tax attorney, CPA, and I tried. So some firms do that because once they hit you with this one penalty and another one, you gotta do a lot to get to do an amended return, and to hopefully they don't place a lien on your bank account and so forth, or your personal assets. But now if they did give you the money, you have, and they say, well, we gave you 15,000, for instance. I mean, there's people, you probably heard stories of some big companies getting millions.
Right.
Well, they got indicted probably. So if they say they gave you 15,000 and you really didn't have a business, and so they're like, well, we want to audit your Schedule C that you said you made 15,000 in COVID and lost it. So it lost it because COVID shut you down. So they'll ask, well, if the person doesn't have a Schedule C that they didn't file. See, in the event of COVID, all you had to do is go online and say, I had this. They didn't ask for documentation. So now they're coming back saying, we want the documentation of that your Schedule C made this prior to COVID. So in other words, COVID hit in 2020. So say in 2019, you're a restaurant, for instance, and they were hit hard. Any business that dealt strictly with the public, restaurants, barber schools, and they had to close them down.
Right.
So they had lost money. So they could have went online and said, hey, in 2019, I made 100,000. This year, I made nothing because I'm closed. It hurt me. So they may have given 50,000. So they might say, okay, let me see your 2019. I see you never filed it. Or so if they never filed, so in 2019, that would justify that they did lose because there's a trend there. So basically, a lot of people applied for money, and some of them did not have businesses and got the money. Some people got as much as maybe from 10 to 50,000 from what I heard out in the street.
Okay.
Not anybody that I know, but and if they did, then they would want. One person did call me and they said, hey, I did taxes for I helped my friend apply for COVID business money. She got 50,000. Can you refer me to a financial advisor for her to invest the 50,000? That money is not for your client to put it in. That money is to help her get her business back.
So you've got to show your efforts in order to get your business back in order. Ladies and gentlemen, you're watching Chop It Up with attorney Linda Bernard on WJZZ, the coolest station in the world. You can watch us, listen to us on any social media platform at your leisure, on YouTube, Facebook, Twitch, Twitter, all of them. And you can also comment and let us know what you think. My guest today, as you can see, is a very distinguished woman. Her name is Linda Taylor. She is Linda Taylor, certified public accountant. She has offices in Detroit and Las Vegas, and actually does consulting throughout America. And she's telling us right now about the pitfalls of taking government money and not using it in the manner in which they gave for COVID for your business. And I'm going to ask you a question about people. I hear these ads on TV and radio all the time about come to us if you haven't filed your taxes for several years, and what people should do when that's the case. Just ordinary individuals who may just have a small business, a mom and pop type thing. What should they do, and what sort of exposure do they have, in your opinion?
Okay. Well, if they say they haven't filed in 3 years
Or more.
Generally the IRS will only go back 6 years. So if you haven't filed for 10,
Yes.
just do the last 6 years. Don't open
Okay.
yourself up for liability. Most of the time, I would probably tell them 3 years. Let's just go back, and they could be getting a refund.
Mm-hmm.
You know, a lot of people don't file their tax. They forget, or they make small money, or maybe they have big money, and they're like, oh, if I file, I've got to pay this. Well,
Mm-hmm.
you know, but if the IRS, if you get a W-2, 1099, or anything that shows your income, it's going to go to the Internal Revenue Service.
Absolutely.
And they're going to like, hey, John Doe, we got W-2s that amount to 150,000. We don't see tax returns. So then they'll send an estimated amount that you possibly owe, because they don't know your deductions, your dependents.
Mm-hmm.
So really, you should try to stay on top of it. It helps you when you're getting ready to do Social Security, or say you want to buy a house. And again, a lot of people are getting refunds. One of the things that hurt people, that when they didn't file, they didn't get COVID money, because the COVID, I think it was 5,000, what have you.
Mm-hmm.
If you made certain amount, you automatically got those checks. Your kids got the checks, so you miss out on some benefits. And you really shouldn't be afraid if you go to your tax preparer, and that can be a tax preparer, the HR block, or CPA. Depends. CPA, our fees are a little bit higher in terms of looking at things. If you want to save money, you have the Accounting Aid Society that does free. So there's a lot of resources, and they can say, hey, you had 4 kids and one of your children was in college, you'll get a refund. Because you can get, if the child was getting Title IV money or something, then you get extra educational credits.
Is there it's interesting we're speaking about families with children and so forth. Is there any extra benefit for people who don't have children, who are over 65 or anything
Well,
like that?
no, if you're over 65 and you don't know.
There's nothing. There's nothing.
No benefits.
And your Social Security, people don't think understand, it is taxable. Is that correct?
Okay, Social Security, depending on when you file it, is taxable only to the extent that you have other income.
Okay.
So Social Security, basically, say you got 20,000 in Social Security. Now, once you get 65, 67, you can work, and your Social Security or disability will not be tapped. And a lot of people, well, I can't work because they'll take away my Social Security disability. Yes, but if you're over 67 and you work, or I think it might be 65, then that's fine. But then Social Security, say you're 70 and you got Social Security benefits of 20,000, you decide to go back to work, and you're making 80,000.
Mm-hmm.
Okay, Social Security, that would be added into your 80,000. So part of that would be taxable if you're earning other money, earned income. Now, if you're getting money from dividends, or something from Schedule C or something like that, well, that would be earned income. So it's got to be earned income. So if you have other earned income, then the Social Security would be taxable at a minimal rate.
So what do you think about these companies that market to our community, as you know, on television and radio constantly? But if you haven't filed, come in to see us. What is this program they keep talking about? The government has Renew. It's not called Renew. It's a program, Clean Slate, something like Clean Slate or Fresh Start.
Oh, okay.
Fresh Start Initiative. What is that stuff?
Okay, well, a lot of people have filed and they owe the IRS.
Oh.
So the IRS is, as long as you continue to owe them, they're going to keep putting interest on. So it keeps adding up. So after a while, and even if you have an installment payment, they might, if you owe them, they'll, okay, you owed us $10,000, you paid $2,000 of the $8,000, there's interest. So sometimes people like, I just can't afford to make these payments, or the IRS, I thought I owed $5,000, but now they've got it up to $15,000.
Right.
So those programs that people say come in, they can negotiate under hardship programs. So I would advise, if you want to go in, if you can't make the payment, see if you can do a hardship or.
What does hardship mean?
A hardship would mean that I don't have any money, or I'm not working anymore, so they can just freeze the whole thing and just put it in a dormant. Or the person may be able to drop the penalties or the interest to get it down to where you can pay it off, you can pay it off. So there's a lot of different options. So I definitely, if you're to the point where you're just drowning in letters from the IRS, or say you went into a payment arrangement and you couldn't complete it, then they can say you defaulted in your payment arrangements, now we want our money. So you should try to see a tax preparer or the companies that, to see if you can get some relief. It's almost like a creditor coming after you. The only problem with the IRS is they can, really place a lien. Not that a creditor couldn't. Creditor could do a judgment, but you don't want to get so far. A lot of times, it gets so bad that the person almost feels this is the end of the world, and it's not. We can, there can be some amended returns, or maybe in some situations, I've had clients come in and they owed a lot on their business. Maybe 2 years ago, they owed maybe, let's say, $20,000, but then in 2021, 22, they had losses. Okay, we can take the carry back the loss.
That's why you said if you haven't filed for many years, then at least file those 3 years, the last 3 years.
Right. Yeah, we try to look at the last. We're not going to go back. I've had people come. I haven't filed in 10 years. Well, you're not. Just go 6 years or 3. You don't want to go way back there because you could have owed money. They're not going to go that far back. So we kind of we attend as CPAs. We are required to attend so many classes with the Internal Revenue Service so we can keep up to date.
Of course.
So, and then they sent us out a thing that tells us here's some of the changes. So we get a monthly change thing. So we kind of try to keep up so we can advise you properly. But like in the case of the one client, they were scared to file 21, 22, and say 20 they owed a lot, and then they're like, I owe a lot. Okay, well, let's see what happened 21. Okay, you got losses, let's do a carry back.
What's interesting to me though is the the whole push of the federal government in terms of what was said to Congress and so forth was that they were going to focus on people who make more than $400,000 a year. Has that been your impression? Is that who they're pursuing, or are they doing the people who make less than $100,000 a year?
The people who make more than 400, a lot of times have a lot of businesses, and they have they structure. They're smart. The people who make big money, they may have 4 or 5 corporations that they are part. So they're getting K1s and they're doing sub S. So they are going after the sub S and K1s and all, because that flows to your 1040. Your 1040 would be some of your companies that you are an investor in. Okay. Now, if you're a C corp, it's different. But if you're S corp, partnership, So, yes, they'll look at that return, and say a person had 4 or 5 corporations. One saying that they have a write-off of 100,000, the other one 200, or I invested in private foundation, so that it can get real picky. However, it's hard to go after the partnerships returns and things, because you got to look at all the partners, so it gets real detailed. So yeah, they are going after the bigger piece. The smaller ones, the IRS has a default system, so they'll look at certain things on your 1040, and people think, well, the agent is sitting there picking on me. No, once the tax return is, everything's computerized, so they have like, okay, this person is sending, they made 20,000, they're claiming 60 pendas. That may, okay, let's just see, because how you living off 20,000, you claim 60. Or I made 20,000 and I'm writing off a mortgage interest of 8,000. That means you're living in 100 and maybe a $400,000 home.
Okay.
You know, so certain things are going to throw up a flag, because how can you be making 20? You got 5 children and you're living in this $400,000 home. How are you paying the mortgage?
Right. Absolutely.
So, you know, little things I tell people. So you really, when the tax preparer that you go to, they a lot of times people back when they claim a lot because you can get earned income from kids. You know, you get extra money. Yeah. Well, you only made this, so you're going to get an earned income check of 15,000 or something like that. The tax preparer needs to be honest with the person, and that's why when you bring information, we actually want to see now they're making us look at the Social Security, you know, make sure their Social Security numbers right. Is this really your dependent? And with us, we have to look at documentation really closely, because they will come after the tax preparer.
So many African Americans and Americans in general, just have a very small business. They like you said, a mom and pop operation. Or she's a beautician, let's say, or a nail salon person, or anything else that's just a service related business. How does the IRS treat those persons?
Okay, well, if they're just an independent sole proprietorship, they're probably operating on cash basis. Some businesses, like beauty salons and so forth, when they come in, the person's paying them cash. Do you give a receipt?
Or credit card, or you know, what is that pay thing you've got on your phone?
Right. Yeah. So they're looking at, again, if the sales is high or low and expenses are high, and you're showing a loss for 3 years straight, that's unrealistic. Then they may look at that becomes a hobby, or you're just writing off, and they look at write-offs. But small businesses, again, it depends on your gross sales and your expenses. Some businesses they may look at because they know they could be cash based, like a restaurant. The people are going to either pay cash or credit cards or something like that. So they may want to pull come in and pull the cash register to see, are you adding up this? Does that match what you have on your tax return? Again, they have like certain formulas. So small businesses, I just recommend to small businesses, don't write off everything. Your home, I want to write off part of my house. You can't write off part of your house. You can only write the part that you're using for the business, and can that client come in there? Yes. So say you have you're using part of your house.
A law office or a CPA, or you're an accountant, and you use your house, because everyone had to move home, particularly during COVID.
Right.
So how do they?
Okay. So say you're doing taxes at home, and then they want to know the square feet, and can the client come in? Or are you doing it virtual? You know, a lot of times you're doing virtual. Do you have the equipment? I mean, you can't say I'm using my kitchen table. Well, you're using your kitchen table to eat off of also. Right. You have to be using that space 100%.
Dedicated space.
It's got to be dedicated, and it can't just be your bedroom or your TV or something like that. So basically, they'll look at the realistic and the square feet and things like that. And if they decide to make a visit to your house or your home-based business, then you need to have it set up where you actually are doing business. And if the can a client come in, if they had to come in under COVID,
right.
They
Right.
didn't have to come in. But it has to be dedicated.
There have been a lot of articles recently on that issue, on how many people are working at home now. And
okay.
I haven't had a chance to read them, but I've seen, the heading on them about working at home and the tax ramifications of that. Can you explain to our
Okay,
audience?
if you're employed by someone and you're working at
Like
home,
Ford Motor Company. I know people who work
yeah,
all the
you
time.
can't write off
The home.
you
Okay,
can't.
no part of it. I got
That's
you.
one of the things that.
Thank you for telling us that.
Yeah, they cannot if they're working at home and like Ford Motor Company or whatever.
Guy I work with works at home.
Then and they say, well, I work at home. I have a computer. I'm using this space. The answer is absolutely no.
Too bad, so sad.
Because Ford Motor Company is your employer.
Correct.
You're not your employer. So first of all, you can only write off working at home if you have your own home business. So you don't have your own home business if you're working for it.
Oh, okay.
See,
so
that's
the
one
key.
thing.
You have to have your own
Own
home
home
business. Which okay.
But-
And even though everything now they're doing, you said on Zoom and electronic and everything, doesn't matter. You've got to have a physical address that's your business address.
Yeah, you have to have your own business. Mm-hmm. You are working for Ford Motor Company.
Correct.
So therefore, you cannot write off the fact that I'm sitting at home and I want to write off the things I do at home for Ford Motor. Well, you need to talk to Ford Motor Company about that.
Right.
So they're probably giving you benefit. I don't know, but no, it's got to be a home-based business you own.
Home-based business. So listen carefully, ladies and gentlemen. Home-based business that you operate out of your home, and that space has to be dedicated. Because I had this question a few years ago, and it was a home-based business, and the person had an office and everything, a separate office at the house, but they only let him deduct like a fifth of the expenses of the house, like the terms of insurance, the quarterly, the mortgage note on the place, sure, a fifth of the water bill, a fifth of the electricity, all these kind. Because the 4/5 was for his private use,
Right.
and 1/5 they said that's what because they did it based, like you said, on how many rooms are in the house,
Mm-hmm.
and all that kind of stuff. So they did it on the 1/5 basis.
Right. And
I had forgotten that till you mentioned that.
right. And then so just one of the things you said about writing off the mortgage interest and all that, you can write off your interest under your Schedule A. So you might should I write off my interest on A, or write a portion off there, or a portion off of the home-based business?
Yeah,
So
and they told him only 1/5. They just did the 1/5 rule right across the board.
Mm-hmm.
All the insurance on the house, you can write off 1/5. But like you said, that's because he had a dedicated space
Right.
that he was operating out of. So, do you feel that this new phalanx of IRS people are going to go against people that make less than $100,000 a year, small businesses, black people?
They are going to look at Schedule C pretty closely because of the COVID money, and that people are making up that they have a business.
The smart people that I know that got COVID money, though, also had taxes deducted from the COVID money.
Oh, they did?
Remember if it was a monthly payment and so forth, you could elect to have taxes taken out. And so
COVID gave a monthly payment? I didn't know that. I thought they gave one lump sum.
Oh no, you're bigger businesses, smaller businesses, in independent contractor. I apologize. In the people who are independent contractors, they would give a check to, but you could have taxes taken out of that. It was like limited to $600 or something. Not a lot of money, not like the kind of money that you're talking about. But yeah.
Well, now again,
But you could, as an independent contractor, you're a painter, and now you can't paint. So so you file for COVID relief, and so you could get if they look at your tax returns to establish how much you were entitled to under COVID, and so once they determine that, they would give you a check, the painter, and then they would give him. Then he could elect on the form to have taxes taken out of COVID money. Which is what I told people to do, because it made sense. Because no sense in taking the money and then, like you said, later having this bigger bill, so you could have taxes taken out of the COVID money.
Okay, now
When only for independent contractors. I don't know about businesses like what you're talking about.
now there were two types of COVID. Okay, you got your PPP, which is your payroll. Now that was forgiven, but then if your company got regular, it was like a loan. So now you have to pay it back.
Oh.
The only money that was forgiven was the PPP payroll, whatever.
Yeah.
And so
Personal
the independent,
payroll, whatever it was, right.
But then the other money, say you got $250,000 in COVID, that was a loan for it. And after 3 years, so people now have to start paying that back through SBA.
So you're saying for small businesses, because those are most of the people that I know and I talk to, and you're right, the bigger companies have internal bookkeepers and they're doing everything routinely. But for small companies and so forth, they should put together all the money that they've received and then all of their expenses, and then have an accountant or someone, a tax preparer, prepare their returns.
Right.
Okay. And if they haven't done that, I'm thinking of numerous businesses, people I know. They should go back the last 3 years, put those schedules together, and file those returns.
Yeah, I would, if they want to grow, or if they want to just keep hiding,
Yeah.
Because then you need to because you may not have to pay that much, and then the bookkeeper or whoever, tax preparer, they may have other things that they can help you with. I mean, if you're going to run a business, set it up right and run it the way it should be. If you run a business, you need financial statements. You need to know what my income, what you need to file. There's so many, after COVID, there was so much money out there for small business loans, emergency loans. A person could buy a building if they had the financial statements. So we have to stop hiding and not, we gotta, because the more visibility and more accurate information you have about running your business, you have the ability to get grants. Even if you write a grant, they're going to say, well, we want to see your tax return. Oh, I didn't file a tax return.
Right.
Okay,
and that throws
you're
you right out.
applying for a grant. And a grant could be you could be a nonprofit or LLC, depending on what the stipulations. Because I've had people apply for grants, and then at the bottom they said, please attach your corporate and your last year tax return. Oh, I didn't file for 3 years. You're not going to get this grant because it shows you have your internal controls are not there. So they're not going to give you money and you're not even reporting to the feds. This is federal money. You're not, or state money or whatever. You're not reporting, so it shows you have no internal controls, and your infrastructure as a business is not there. You're loosey-goosey. So in other words, file, even a nonprofit, some people they have a nonprofit and they may file, if you don't file 3 years, you lose your status. But even if you make under 50,000, you just go online and do a under 50,000 tax return. But if you tell them I've never filed, and you've been in business since 2005, that doesn't look good.
No,
So
you're saying you've got to have the infrastructure.
right,
Okay.
yeah, definitely.
All right. Well, you have just been so helpful
Well,
in
thank
everything.
you.
And as we both know, a number of professionals, like even people in your business and so forth, don't necessarily file their returns and so forth.
Oh, well,
when they're home-based small businesses,
Okay,
you
well,
know.
let me just say, people in my profession, as a CPA, if you do not file, you will get suspended.
If
We
you're a
have
CPA.
to file because in other words, how can I help you do your taxes and tell you what to do, and I'm not accountable for myself? So in other words, you are representing the credibility of the profession. So if they find out you haven't filed in 1 or 2 years, they could suspend you.
Okay.
So we have to file.
Okay.
Another thing, when we go in to get our PTIN number or whatever to to do taxes or to do
you have to certify that you filed your tax.
and they know. They know. Once you put your ID in, they say, oh, you didn't file, you don't get this.
Linda Taylor, CPA, distinguished woman, uh, um, obviously
Well,
a
thank
person who's a businesswoman in multiple states with multiple certifications. Thank you so much for joining us
Well,
today
thank you for
on Chop
asking
It Up
me.
with Attorney Linda Bernard. You have taken me to school, and you have taken our community to school as well, which
Well,
is
thank
very
you.
important. I want to thank you for coming today.
Well, thank
and
you
for
for
joining us.
inviting me.
Thank you, ladies and gentlemen, for tuning in to Chop It Up with Attorney Linda Bernard.
Okay.
Thank you.
Yeah,